All right, this is a ProAct Traders tutorial on target trading, and nobody's told you can make $3 million in 2 weeks in here. Possibility exists you could sustain a loss of some or all of your initial investment, therefore never invest any money you cannot afford to lose. Be aware of all the risk associated with foreign exchange trading and seek the advice of an independent financial advisor if you have any doubts. All right, so this tutorial is understanding the ProAct Traders methodology. And we operate under these principles. We try and figure out the big boys and their movements. We look for the structure of the market for opportunities. In other words, we don't go in the market looking for a trade. That's what dumb money does. We go in the market looking for the structure of the market, and the trade will become evident. We trade only with the trend because 80% of the money is made with the trend, only 20% of the money is made against the trend, and against the trend has roughly 300% more risk than trading with the trend. We only trade in wide open spaces, and we never scalp. We trade with stops and a plan for every single trade. We press our winners without exception, and we are not indicator junkies. We do use indicators, but not to trade. Indicators are not tradable. They are information gatherers. So the big boys create structure. Structure is critical so that the follow-through understands where the market is heading and why the market is doing that. So you got to watch out for sites that say, we found the holy grail trade and only we had it. If you trade with us, you could be successful, all right? That's marketing. All right, we trade what the people who print the candles are doing. That's the big boys. So who are those big boys? Well, this is from Currency Magazine and the top 10 currency traders of last year in 2014. You can see that these 10 banks here are only 5% of the total market, but they control 92% of the volume. They are the ones who print the candles. Citibank and Deutsche Bank combined are over 30% of all the trades made in the forex. Now, these big boys right here, they determine the market structure, and follow-through comes from the 500 to 800 banks, sovereigns, and hedge funds that exist around the world who follow these big boys. We, as retail traders, are part of the follow-through. So we have a little saying that works for us. We want to trade for pips daily. We call it TFPD. All right, so trade for pips daily. What does it mean? T stands for the trend. We have to know the trend because we only trade with the trend. We have to know where the fibs are, the Fibonacci ratios. We have to know where the P or the PSRs are, previous support or resistance. And D stands for divergence, or the end is near, but it may not be here, okay? So it's very easy to, what I have to know every day is to trade for pips daily. I got to know, and it's called an acrostic. The first letter of every one of those words stands for something I got to know in the charts. In addition, there are multiple nuances in the market. These change based on the real estate of the day. The trader's job is to incorporate these into any trading plan for today. You cannot learn a structure and the nuances in 3 weeks. So you have to have a paradigm shift in your brain, and what you have to do is you have to change your behavior. All right? The only way to learn structure and nuances in the market is to go study them. Now, we trade with risk being the paramount consideration. So we trade using what we call a scout. All right? So new traders, do not try and make money in the beginning. Learn to make pips. When you learn to make pips, the money will follow. So new traders learning to trade to the targets, you will trade only micros. Here's our scout policy, which is also our stop policy. All right? First of all, we never risk more than 2% at risk on all open trades. And in the beginning, for a new trader, that is 3 micros max. Okay? So we divide that 2% into a dollar figure and then divide that amount into 3 parts. All right? Part 1 goes on at the first part of the trade with 3 times what the stop would be if all 3 parts were traded. In other words, we already have a dollar figure that we know we can risk. We'll show you that in just a minute. But we've divided it into three parts. Therefore, if we can risk $100, or we're only trading a third of what we could actually have a 3 times greater stop, and we have not increased our risk at all. Part 2 goes on when the trade proves itself, and the stop is then to move to 50% of the former stop. And then Part 3 goes on, and stops are now moved to the support or resistance, depending on your direction, up or down, plus 5 to 7 pips on an odd number ending in a 3 or a 7. And we never use a 5, and the reason for a 5 and never using a 5 is because option contracts use 5s. They also use even numbers. All right? So let's take a look and see how this works in a real-world situation. This is a schematic. So we're making an assumption here: 2% of our account equals $100. That means, and we're going to trade 3 micros with a 33 pip stop. All right. So trade 1 goes on this break right over in this area right over here, as you can see. All right. Trade 1 goes on there, and our stop is 99 pips because we have a 33 pip stop. All right. Now you can see we won't get stopped out on a wick coming up or anything like that. All right. Once the trade begins to prove itself, and we see, oh, I'm still got room to the target, we put our second trade on right there, and now we move our stop to half of what the original one was. We're still not risking any more than the $100 or the 2%. All right, the trade continues to prove itself. We add our third position on, and now we use the stop or resistance as our stop, 5 to 7 pips above that. In this case, it's resistance because we're going down. All right, so that's how it's done. And what that does is it makes you trade at a lot less risk, but the trades that work, you are pressing your winners in markets that are trending. So our charts were created to show multiple time frames, and it's one of the keys to drilling down on the big boys. They are created to show harmony and momentum for the initial thrust of a movement, to find the most likely targets of the big boys, and to define the wide open spaces where we can trade. Since we only trade in the wide open spaces, we have to identify all the areas where we can't trade, so that all is left is the areas where we can trade. So we're going to go into the charts, and we're going to quickly review all these points, okay? So all the things we do has its own tutorial once you get involved with us, and you start on the beginners page under learning on the website. So let's go in the charts now, and let's take a look and see how this stuff works, okay? So we're looking for, let me just take a simple TFPD, and let me look at here, over here. I'll take the euro. Everybody likes to trade the euro. I hate the euro, but that's okay, all right? So we look for structure, okay? So here we go. We can see that we have a trend. Trends are always, there's a separate tutorial on trends. Support and resistance has to be identified, and the market has to prove they know where the heart line is, okay? So we can see the trend is down. So we'd only be looking for trades to the downside, okay? And we are measuring the waves. You can see there's a 1, a 2, and a 3. We're still in a 3 wave. We'll have another 4 and then a 5 wave, okay? So we use a special tool that we invented to measure the waves, and we're using that right here where it finds the Fibonacci sequence to that direction. And you can see the market knows exactly where these things are, right? Now, the next thing we do is that we put on a set of fibs, and we go back here in the past. So we go back here, and we see we have this big movement over here. We take the swing low and the swing high right in here to find the movements in the heart of this movement we've been going into, all right? And you can see there's a 50, the 382, 214, 618, 786. And you can see over here, the market knows exactly where these lines are, right? So we set a set of fibs to the downside, right? So now we have interim targets in this move right in here. Let me make these candles a lot bigger here. All right, the next thing we have to do, so that's, remember, we're doing TFPD. So T is the trend, we've done that. F, trade 4, F stands for fibs, we've just done that. And PSRs is the next, previous support or resistance, okay? We're looking to the downside here, so I've done the downside ones for you, okay? So we go back in the past, and we find the areas where the previous resistance was, and the previous resistance becomes support in the future, in a future downtrend. So you see where these arrows are. I've taken these, I've taken this one, I've taken this one, I've taken this one that's hidden right in here. I've taken these and put lines on them, and they go into the future. That's the TFP part, all right? Now, as the market moves down, let me make these candles a little bigger, and we'll see as the market moves, all right, we can identify the wide open spaces that are here, all right? So we'll just take this last move here. Here's a wide open space. It's delineated in half by this PSR, but this PSR was taken out over here, so it's no longer there. So what does the market do? Goes to the target. The next one is right here. Where does the market go? To that target. That's a wide open space. Next one is right here. There's the wide open space. That's the our target tool or HSI tool finds the place where the market should stall. When we bounce up, we're looking for this one right here, and this is a big wide open space delineated by two. One space is above here, one of these places down here. And these are the only places we will trade in, all right? So notice they know where that line is, and they know exactly where that line is. Here's our next spot. We're looking for a pullback and then a go, and what do we do? And boom, right down, and you see they went right down to them. So these are the areas that we have to identify. We can't trade into this line, but we can trade to it. We can't trade into this line, but we can trade to it. We can't trade into this line, but we can trade to it. All right, so if you know where that line is, you won't make a trade right there, but you will make a trade here where you have room to it. You see that? These are what we determine are wide open spaces, and they really help us in determining where the high probability, low risk trade is, all right? And you can see the market just takes off and does them right away, okay? So let's take a look at a couple other ones here. Let's go over to the dollar CAD. Let's go to some charts that I already have lines on so that we don't have to recreate them. All right, so here's the dollar CAD. We've been trading this up for the last 2 weeks. And you can see, we can tell you right where our trades are. Let's go back as if it didn't happen here. All right, so here's our first opportunity is to trade up to here. All right, see there's a line there, and there's a wide open space. Above that line, the next one is the confluence of two HSI targets right there. So when we get a pullback and go, where do we go? Right to it. All right, now we got a big opportunity up here, and let's see if they get there. Boom, right to the target, that big wide open space there, all right? See that? All right, now up into here, we're looking to go up to the top, all right? They almost got there and didn't quite get there. And of course, now we've been correcting. Now, once we corrected back over to here, bounced on the trend wall, we now know that our target, this has already been taken out right here. This one has not. So this is where we're targeting, trying to get to. All right, the first trade was up to the top right here. So there's the first trade. Second trade is above it right there. See, when you do the lines, it becomes very easy to find out where we're trying to go. And that's what we're looking for right now, is that thrust up there, right? Now, down here in the little lower charts, okay, I'm up on a 240 showing you the big spots, but if we go down to the little lower charts here, we're going to see the harmony and momentum come in that our charts create, okay? So once the movement takes off, all right, let's see where the bounce occurs. Okay, here's the bounce. The first bounce occurred on the line, and you see money came in right here and accomplished the drive up to the target, all right? They ran out of buyers here, so they come down and correct and see how low they got to go before they get the next set of buyers who come in. Nothing happens for quite a while right here, and now we're starting to see, and once we get out of this moving average, we're going to be really excited. Okay, we're out of it now. Notice so are the other traders. As soon as they got out of the moving average, there we see the money start popping in. All right, and there we go, right up to the target. See that? All right, so these charts are designed to show the momentum coming in to accomplish the move or the thrust to the target. All right, now for us it becomes very easy to do risk and reward. Okay, so we take this opportunity right here. For instance, here's our last support. Here's our 5 to 7 pips below that. So here's our risk on this trade, and here's our potential reward. See, we can make a good risk for reward assessment and decide whether that trade is worth making. So it's very simple to see once you do the work. What happens is you got to learn how to do the work. All right. We'll just take one more here. We'll go over to the pound Aussie here and see what that is. Where's the pound Aussie? Right here. Okay. All right. So you see, we've been trading this down all week, and you can quickly see where the wide open spaces are. The wide open space is right there, and there's no real wide open space here. But once we break into here, we're trying to get to here. We run out of sellers here. But you see right there, that's about 80 pips right there. They pull back up. Once they pull back up, we know the next target's going to get hit. So down they go, right to it. You see that? All right. So this is what we do. We identify these wide open spaces, and these wide open spaces are the only places that you and I can trade. It has the highest probability of the big boys making the move. Why? Because we're using their numbers. The past holds the key to where they're trying to go mathematically, and that's what we do day in and day out. Now, The next thing, we're not indicator junkies. Yes, we have a trade setup, but a trade setup is not a trade. A trade setup only becomes a trade when the currency proves itself in a wide open space with plenty of room to the targets. And since we're always pressing our winners means adding to a winning trade. We are always looking for wide open spaces where we have the ability to do that, okay? So wide open spaces give us that opportunity right there. So I hope that helps you in understanding what we do here at ProAct Traders. Here are the indicators right here. We don't trade them. They feed us information. These down here feed us information. We don't trade this stuff, but we trade this up here. We trade price action based on high probability, momentum, and harmony being in the market. Our charts are designed to show momentum, harmony in the market. As you can see here, let me just go to another chart where I got nothing on it so that you can see what that looks like on a blank chart. So let me pull the pound Aussie up, pound dollar up here. I'll remove everything off of here. All right. And we'll go down here to the 10-minute chart. All right. So you can see that one of the things we always identify as the desert area when we're going away from the desert, which is these two moving averages here. Can we all see that the money comes in to make that happen? The money comes in to make that happen. A pullback, that gives us an opportunity to add again and go again in the next wide open space. All right, so there we go. All right, now you can see there's nothing happening here. And then when the money comes in again to make another move, you can see it come in right here. See the money coming in, harmony and momentum. Now, we have a big square up that needs to be done. We go back up here to square it up, right up in here. And you can see that's a counter trend trade. We will not be in that trade, but we will be in the sell. All right, so I hope that helps you, everybody. We will talk with you soon.